Okay, and now we got this going here, I think. So what we're looking at right here is the SPY market pressure accumulator, which is this one, which we can see was started to turn down at about 9:57, call it 10 o'clock. The SPY market pressure measures the visible supply and demand. We look at our liquidity accumulator, and we can see we just had a big sell spike, which looks like about 500,000 shares, 676,000 shares. And let's see whether it was a dark pool sell spike. Look at that. So what we can do with our accumulator, let me see if we can get this in here a little better. We can just simply switch between all the various different feeds. There's the algo only, here's dark pool only. We can see the dark pools have been selling all day. Got a little bit of glare in the thing. And so what I really wanted to show people was the delineator. Here's our primary delineator. It measures cycles, and we can see that it turned up from a very strongly negative level, minus 9,200 here on the 29th. And we've essentially been in the same up cycle ever since. When the primary delineator turns up or down from an overextended level, which is a measured amount, in this case anything over plus 9,000 or minus 9,000, and if we use our crosshairs here, we can see that it turned down from minus 92.44. And as of the close yesterday, the delineator was plus 83.05, and at the moment it's plus 8,500. So it's at the very upper end of its range. What was important today was the fact that our slope value on the secondary got up to over plus 250. We can see it's plus 218 right now. And also is when it gets up near plus or minus 250, that's typically about as high as it will go. And you can get a reversal from there. So we see this cycle turning up today. We expect that since we have a incomplete down cycle from the prior day, that we would expect to see these highs fail once the primary did turn down again, which will probably be tomorrow, possibly later today if we get a reversal in signal weight. But we like buying into the lows and selling into the highs, and that's what the delineator and the accumulators are designed to do. At these lows back here on the 29th of September, you know, if you read most of any tweets or anything from the financial press, they were telling you the market was going to go down even lower, but we know that that's not the case, and the only way you can buy into the lows and sell into the highs is when you've got an indicator such as the accumulators or the delineators that help us to do that. Personally, I like to trade intraday 50-cent ranges, and I would prefer to see a market that simply trades a range and goes nowhere. Those are actually the best trading markets. How much is that indicator? How much is that indicator in the window? Each program is $199 a month, so $398 for both programs, the delineator and the accumulator. You can watch how these programs run by signing into the delineator journal, and you can get a free look at that for a couple of weeks if you go to HFTAlert.com and look for the delineator journal section, and there's a sign up there for a free trial. Let's look at Twitter. Now, Twitter is my favorite stock at the moment, and I'm really quite amazed that everybody's talking about moments, and they're not talking about Periscope. I think Periscope is the killer app here that will really take Twitter into another level. Periscope primarily is being used by a lot of very young people, and they're the early adopters. But for personal broadcasting and showing people things in real time, especially news events, sporting events, things that occur. During the news day, for example, I've seen a number of reporters, especially at fires in California, start to use Periscope for their broadcasts. So looking at our market pressure accumulator for Twitter, let me open up a 15-minute accumulator here on Twitter, and we can use our accumulator program to TWTR. Here we go. What percentage of the time do you see a reversal at plus or minus 8,000? 100%. At plus 9,000 or greater, the delineator always reverses 100% of the time. And it's simply a matter of how you manage that information. If you're an aggressive trader and the delineator is up at an extreme, you just continuously sell new highs and build a larger and larger short position into those highs, or sell spreads into those highs, and you'll do very well, provided you stick to the course. If you freak out because price freaks you out, then, well, I can't help you there, but 100% of the time. And if you go to my journal, I have 5.5, close to 6 years of journal archives, and you can query for overextended up or down, and you'll see that at every single time that the delineator gets overextended up or down, it reverses, and it's simply a matter of how you manage that information. So let's look here at our Twitter 15-minute accumulator, and I'll increase this to show a longer time period. And I look primarily right now at the market pressure accumulator, and we can see that we had a pretty sharp drop in it here starting in September. Just got another, hold on, just got a 250 share program hit. Let's see what it was here. Hold on, folks. See, it was another sell program. Let me switch this over to this screen. So that large spike right there, that's a 270 share program, it looks like. So we're going lower again. Let's bring back in our Twitter window here. There it is. Now if we look at our liquidity accumulators, all we see is selling. And I think this is pretty much mostly dark pool selling, which I believe to be primarily planned insider sales, which overall, in my opinion, is positive because it distributes the stock to a wider base. But on the market pressure here on Twitter, we've seen a rise from the low. It's still well below the levels that it was back in September. And we can see our price here has gotten back about to the breakdown level. So it'll be important to watch it here over the next couple of days. So that's, any questions while I've got people on the line? Let's bring back our SPY accumulator here, if I can find it. If you see charts that aren't refreshing on the journal, hold your shift key down. It's a process of your browser. Everything is running just fine on the journal. So what's happening is your browser is caching. It's 11:20, and I see all charts are refreshing at 11:20. If you're using Chrome, Chrome is a notoriously bad browser for the journal, because what happens is in trying to make it move faster, it caches images and it doesn't see the timestamps on the images. So refresh your browser, hold your shift key down, which clears your cache. What are the horizontal lines? The horizontal lines here are volume at price. We really don't care about volume in the time domain. We care about volume in the price domain. And what this tells us, yes, I would expect a new down cycle on the primary tomorrow. What this tells us is where there is volume, at what price. So if we bring in our delineator again, which is where we primarily want to watch this, there was a large volume null between, and I pointed this out on the delineator on the journal, between 194.60 and 196.80. And what happens when, the reason why we track volume at price is because where you have nulls and where you have large bars, that tells you that there's either no volume in this level, in which case we would expect to see price move quickly through it, which it did. And when you see large volume at price, that's typically where there's a lot of volume and you would see selling. We use these to define resistance levels, and we use them to define support levels, along with our chevrons, which do the same thing. And a double chevron is stronger than a single chevron. And where you see multiple chevrons and volume at price spikes occur at the same level, then that creates either stronger resistance or stronger support.
Order
We see that both
filled.
on the primary scale. We also see that on the secondary scale. So we see that we have a large volume at price null between 200, call it 201, and 205. And if we saw price get up into that level, it would move very quickly through it. That would be our expectation. We don't use moving averages. We don't use channels. We don't use trend lines that are drawn diagonally. We use trend lines that are drawn horizontally because we know that trading algorithms will move to whatever the current range is on whatever time frame, and you would expect the price to hold those levels for at least a few minutes. And if you're trading 50-cent ranges, as I like to do and like I like to teach people on my journal, we're going to spend more time on that over the coming weeks when we get our chat channels up, which are coming very soon. And thanks to our friends at Sanglucci, who we'll be working with here shortly. And we'll have a separate channel just for trading 30-minute ranges. What sizes for the 50-cent ranges? Well, the larger the range, the easier it is to trade a range. So if you're trading for 50 cents in a 75-cent range, well, that's going to be difficult. If you trade for 50 cents in a buck range, it's going to be a lot easier. Price followers will often see a market and call it choppy. Well, chop, in our book, is the best environment for trading ranges, especially when the ranges are high. It's easier to trade for 50-cent ranges when volatility is high, and it's more difficult to trade when it's low. And how we use the delineator to do that is when the change value, which is the direct measure of momentum in any cycle, is very high. We trade in the direction that the slope is moving when the change is very high. Anything above 50 is considered high. Anything above
Stop
100
filled.
is very, very high. And we want to focus our trading during those periods of time and not during other periods of time. So the trick isn't necessarily being able to predict what the market's going to do over a couple of days. The trick is being able to predict what it's going to do over a couple of hours, and that's very simple to do using the delineator. And we'll do another Periscope just on the delineator here probably in the next day or two. So I need to run some posting. We've been on the broadcast here for a bit here, about 20 minutes. Are there any other questions? Take a quick look here at Twitter. Not doing much, and let's find our SPY accumulator. Here it is. And we can see that this is the full feed. We can see it's quite heavily extended down. Extensions down, or a reversal indicator. If we look here at the algos, we can see they extended down here at about 11:14, and the dark pool is also at the same time. Our market pressure is moving lower, so we would expect to see this level down here get filled. So if you had a target, that would be it. Whoop, that's not a very horizontal line, is it? Let's draw that a little quickly. So there would be your target. And here we see another 125 share sell spike come in. And Our signal weight is now down to minus 34, or excuse me, plus 970. So that's it. If you'd like to get on the journal, I make most of my posts. Here we can see no prices hit that target. That target number was 197.67. The next level would be here, and then their next level would be there. Do extensions reverse the delineator cycle? No, they don't. Those are the extensions on the 1-minute accumulators are used for intraday range trading. Although if you saw an extension up at a high with signal weight at a very high level, then that could be a reversal signal. That's at that point. So get on the Delineator Journal, go to HFTAlert.com, and